We got it. Craig is here. Let's take a look at the market technicals with Craig Johnson, Piper Sandler Managing Director and Chief Market Technician. And I never find myself in a position where I'm a market hater, but I just have been feeling increasingly uncomfortable with the narrow leadership and NVIDIA really, and AI, and maybe fiscal stimulus, all these things that don't seem organic that the market is feeding off of. You feeling the same thing a little bit, that the engine warning light is on?
100%, Joe. We do think that the engine warning light is on. We think this is a market that does need to correct. And when we start stacking up all the things that we are observing technically on this market, amount of stocks that are above their 200-day moving average, the number of stocks that are making 26-week new highs in the market, the number of stocks and the concentration in this market. I mean, Joe, right now, 30% of the entire investable market is technology. I mean, we haven't seen numbers that high since the 99-2000 period of time. And then when you take NVIDIA, Microsoft, and Apple, put them all together, they have a market cap combined that's 320% larger than the entire Russell 2000. That's crazy. And everybody just says, we got to keep buying NVIDIA, AI, AI, AI. But at this point in time, it's just gotten to be so far ahead of itself. And in fact, go back and look at all the semiconductor sort of historical charts going back to the inception of the SOX index or the Dow Jones Semiconductor Index, and you'll see that we've never been this far above a simple 200-period moving average since 99-2000.
And even fundamentally, if you just think about how things work, so we're building out the AI infrastructure. We're ready to go. All right, let's use it. And some college kid's going to say, okay, I got a paper that I got. When does it become a money-making endeavor for everybody that's now using the build-out? I mean, I understand NVIDIA's got to build it out. A lot of money in fast chips, all that stuff. But, and maybe it's just going to take a while. AI is not going to transform the world in the next 2 years, is it?
No. AI is truly transformational. There's no question about it. By
when?
You got to look.
When is it a big moneymaker for everyone, like the internet?
I would look 5 to 10 years down the road at least. Because if you think about global crossing, I mean, they ripped up all the streets in New York, Minneapolis, everywhere else to lay all that fiber. They're still lighting some of that dark fiber, Joe, that's been sitting there for years. That took a very long time. It took a long time to build out all the applications, change human behavior in terms of doing more self-service with the internet versus having the customer service. It's going to be the same kind of process with AI. We tend to always get ahead of ourselves from an investor perspective as we chase these themes, and I think you're there now.
Transports are lagging. Did you mention that already? There's a lot of, so under the surface, there are some trouble signs. What would correct that? What would you be looking for that would wring out this, whatever you want to call it? Is it complacency? Is it speculation? What is it?
Well, there's a couple things that I think that need to get ultimately sort of wringed out of this market. And you're right, transportation, that has lagged the overall Dow by over 15%. And when you have this sort of divergence from a technical perspective, it is what you call sort of, Dow theory is not confirming this market. We've made a new high with the industrials, not with the transports. Guys like Ralph Akampora that followed Dow theory for years will tell you that this is not a timing signal, but it's definitely a warning sign on the market dashboard that you got to pay attention to. You also got to pay attention to the fact that the yield curve has been inverted for over 2 years now. Again, not an immediate timing, but again, another warning sign. How far do we need this market to correct? I would say at minimum, if we just go back to the 200-day moving average, Joe, you're basically correcting over 10%. And I think that's a good starting spot over the summer months to play out.